Welcome to another edition to the end of day PulseWave report of yours truly, the algo capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports that we make available to you each and every trading day on your dashboard at PulseWaveTrading.com. All right, so here we are. We are now into the month of August. And we're already starting to see the 2012 repeat come into play. Okay. Now, what happened in 2012 was very special because on July the 31st, that pretty much marked the end of the down cycle and would begin the building blocks for a rally. All right, so that's what we have going on now. Take a look at the first chart of gold futures. You see here's your crash alert, sell signal, and then here's your downside production. And then the market kind of stalled out today. It should be noted here that we're in the bullish zone now. All right, and prices have ceased from falling dramatically. And instead, you're getting these very tight trading ranges, and you're getting a situation where the market is just kind of like just hanging out. All right. Got to watch that because the market could reverse here and start rallying again. It's one of those times where you have to really pay attention to the movements of the markets. Take a look at the US dollar index. All right. It's out of the green zone and is entered into the red zone. So we went from bullish to bearish. Here was your crash alert sell signal. Here's the repeated downside production. Now the market's right here bouncing off of the trend line support. The question is this where we accelerate with a new leg down and you start to see prices come down even further with the possibility of dropping back into, the low 90s, getting back here, dropping below 91.5. That's a very, very big possibility. And as this dollar falls, this should be a boon to commodity prices, amongst other inflationary parameters that are taking place. Here is the euro yen. So the euro yen is in a bearish zone in the red zone, but the US stock indices are in more of a bullish environment. So you can see here where the bulls are keeping the market afloat right now and trying to flip and get some momentum going back up here toward the overhead trend line resistance. 131 has been a target that the market is desperately trying to get back up to. So this could be the zone where the market's going to stage a comeback and start rallying from here. But it's also a danger zone because you're still below the trend line resistance and below the Kumo cloud. You're very much in the red zone, and the market could lock back in on the selling pressure at any moment. So this is a do or die battleground right now for the euro yen. It tried back in here too. Tried to stage that recovery only to get the rally sold out by the bears. And we could be seeing the beginning stages of another leg down as well. So again, got to tread cautiously and follow the reports. Take a look at the Nasdaq 100 futures. All right, so here is your crash alert sell signal, but we have yet to get any downside production. This is rare. All right, now our rally and crash alerts can lead the market 3 to 5 days out, and this one is stretching. So 1, 2, 3, 4. Today was that 5th day. We got no downside production. All right, none. All right, the bears are holding the market at bay, keeping it from rallying, but unable to bring into a new low. The question is, since this is an anomaly that happens from time to time, are we going to see a situation where the bulls come in and defend at this price level, at these levels, at this 15,000? Or the bears going to take this as a sign of weakness and drive the market lower. Now, the bulls have everything going for them. We're in the green zone. We're in the bull market on the daily chart. You can see just straight up, 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 up. We got little pullback, but no real corrections. All right. Not even making it down toward the trend line support. So is this another failed attempt by the bears? And are the bulls about to lock back in and take prices higher? That's the question. We'll have to wait and see what's up. But this is definitely something to think about and watch. You really have not had a correction since you had the rally alert buy signal all the way back here on May 13th. That is quite the rally in the tech sector. What about crude oil? Well, crude oil is trying to do a little something. It's been all over the place. You had your crash alert sell signal back here on July 6th. Got that initial downside production, bounce off the low, only for the bears to come in and sell the rally hard. Came all the way down here. You broke the trend line support and actually fell into the Kumo cloud, testing the bottom, the support of the Kumo cloud before bouncing and then rallying back, not high enough to take out the previous high. Bears come in, see that as a sign of weakness, bring the market back down hard yet again. So the market has been taking it on the chin. The volatility is increasing. You can make an argument that maybe this is a sign of a topping pattern. But remember, crude oil is that gangster market. You've left the red zone bear market to the green zone bull market. So the market could stage another comeback here, and another up leg could be the result here. So this is also very interesting times to watch if you play in the oil market. Very interesting indeed. A lot of crossroads here for a lot of these markets. Then take a look here at silver. All right, so silver had this rally alert buy signal back here from July 28th. We got that initial up thrust. Now we're just kind of moving sideways. All right, so the short-term low has been put in. Overhead trend line resistance at 26 is still the initial target on this run. Will the bears leave the market alone and let the market run? Can we get back up to 27 maybe even? We'll have to wait and see. But right now the bulls are defending this this key support zone. All right, next up. Here is the soybeans. All right. Now, soybeans put in another new low, new weekly low right here today. All right. Even in the face of the US dollar plummeting. All right. So the dollar's pulling back, but so is the soybeans here. All right. Very interesting turn of events. You can't really say too much about inflation when the prices are below the overhead trend line resistance and below the Kumo cloud. Prices are falling. You can't get away from that. And now we're looking like we're preparing to fall out of bed and put in a major down leg from here. Looks like beans in the teens was a short-lived phenomenon, and the market just can't sustain these prices. So prices are coming back down again. Next up is the Dow futures. So the Dow kind of like the tech sector, kind of like the S&P. All right, bears are holding this market too, not letting it get above that 35,000. Hard to get those closes above 35,000. And you saw the market went straight up here since the June 21st rally. We had this sharp pullback here, this sharp correction, broke trend line support, tested the Kumo cloud support only to bounce back up. We got the crash alert sell signal, and then another phenomenon. 1, 2, 3, 4. The fifth day came down here, and then we rally into the close. So, and you could say that the prices were attracted by the day before because we put in this bullish pointer, but the market stopped short of that. So the markets are definitely at a crossroad. You're in the green zone. You're in a bull market in the daily. You see how the market has been precise and coming up, and the Dow though has had these corrections along the way. At least two of them all right, and you failed. You closed below that trend line support here, and then rally back up, and then you close it here, and then you rally it back up. So very interesting turn of events, and this one came and created new highs from it, and now here we are again. So are we topping out? Is the market getting tired? Are we about to repeat 2012 and put in another rally, another high in the U.S. stock indexes before the turn? Well, here's your Aussie. Look at this one. Again, bounce off the low, got a little technical bounce. Bulls are staging a comeback. Overhead trend line resistance is where we're looking to go here. And we'll see if it can sustain, if the bears can leave this one alone. But again, you are under bears territory. You're in the red zone, and you're below the overhead trend line resistance, below the Kumo cloud. So this one could lock back into at any moment. All right, looking at the Canadian dollar, you can see same story. You've crossed over from the green zone to the red zone. We've gone from bullish to bearish now, even in the face of this 3-day rally. All right, you gotta think about that. All right, you're in a corrective zone. All right, you are full red. The high is here. All right, short-term high has been posted. Where do you go from here? Is this a rally setting up for the leg down that crashed through the Kumo cloud and into new lows? That's where the market is flirting with right now. And then last but not least is the mighty Bitcoin. Take a look at this one. So we had the rally alert sell signal, the crash alert sell signal coming into today, and you did get that downside production. The market stopped short right at the trend line, right here at the trend line support. All right. So it's already at target. Secondary target is the bottom of the Kumo cloud now. Will we see more of a dramatic drop? And this is the futures, by the way. This is the Bitcoin futures, okay? And we do have this gap here to contend with. So I'm thinking the prices are about to fall and come down in Bitcoin. All right, this futures chart is suggesting that the gap that needs to be filled back here is there, and that a short is coming. All right, for you Bitcoin traders out there. All right, I see you. You want to know what's going on with the theta. Let me get that pulled up for you real quick. All right, so theta right now is very, very quiet. All right, so you're kind of flatlining up here. You got the flip-flopping going on at the overhead trend line resistance. You saw the crash alert sell signal come in here, flip, right? Got a little bit of production intraday, flip, another alert, and it's just been flipping around, and you barely have any range. All right, the market is just pretty much frozen at this level, having a lot of hard time closing above the $6 mark. You get the intraday spikes. Here's spike 1, spike 2, creating bullish pointers, but only for the market to come back down and just float around the bottom right below here, the trend line resistance. So you're in the bullish zone. You've crossed from red to green, from bearish to bullish, but you're not getting any follow through as of right now. The stage has been set for theta to rally. All right, and we'll have to watch for that. So definitely follow the dashboard, follow the reports on that, on how to position yourself for that possible move in theta. All right, so that's it. Go ahead and smash that like button. And if you haven't already taken advantage of our steep discount at PulseWaveTrading.com, go right on over there and take advantage of that, because once the promotion is gone, it's gone. So take advantage of the promotional code so that you can sign up and get these reports delivered to you, so you can position yourself to make some nice profits in these markets. We live in very difficult, tough times. And I believe that more challenging times are ahead, but you can position yourself to make some money and to build a nice, strong, consistent income stream by learning how to trade these markets. And with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.